Yeah. So Yasir, your question was, if we do our analysis on the 4 hour time frame, can we enter on the 1 hour time frame without waiting for the 4 hour candle to close? Now, the thing is, you can definitely use 1 hour time frame for entry when you're looking for 4 hour structures, your analysis on 4 hour daily time frame, weekly time frame. That doesn't mean you're looking for entry on the daily time frame, right? If you're analyzing on daily time frame, what you do is you go down to lower time frame and then you take entry. But it doesn't mean that you don't use 4 hour time frame for entries. What it simply means is there are different opportunities given by the market, and based on that you take entry. At this point, for gold, what we analyzed was 4 hour candle close above the zone to enter, right? 4 hour candle close above the zone to enter. So that happened. But I also said need structure for stop loss. Need structure for stop loss. That didn't happen when the market opened. So candle closed and then there was some structure, and on lower time frame there were better structures. It took a lot of time. That shows that market respected the buyers and it started moving up. And at this point you can see the 1 hour time frame gave an engulfing candle. So 4 hour time frame was necessary at this point to give us a candle close above this zone. This close was very important. If this candle close wouldn't have happened, we wouldn't have entered. And I'll give you reasons why. Now you can clearly see this 4 hour wick at this point. If you don't look for a close around this area, then there's a candle. There might be a 1 hour candle close just above this area, right? You're seeing structures when you're analyzing the market. You're seeing structures that 4 hour time frame is not closing above this line or even around this line. It's just closing below it. This was the first candle which closed, but we were looking for a close just above, and that happened. That is all we needed. We didn't need anything else. Now we needed structure for stop loss, and that happened throughout the day. And on lower time frame, we saw a break above the previous high, a break above the previous high. So that is enough for us. We don't need anything else at this point. I hope I'm making sense. 4 hour time frame and daily time frame and weekly time frame is good for analysis. 4 hour time frame is good for entry as well. And 1 hour time frame is also good for entry. 1 hour, 2 hour time frame. 30 minute and 15 minute is something which is very rare. And over the period when you start trading properly with your own mind, you will realize when to take entries on 30 minutes. Even though I have years of experience now, but I myself never take entry on 30 minutes. That's ultra rare for me. All my trades from history, you can see there's only one trade in recent, like a month or 2 month back, where I took entry on 30 minutes. But other than that, all the trades are at least based on 1 hour time frame or 4 hour time frame, because these time frames gives you an idea about how buyers and sellers are working out together. 15 minute and 30 minute time frame, there's too much noise and too much momentum for a short period, and then you see the real candle move after those candle closes. For example, right here, if I see this candle on this 1 hour time frame, it went down to the wick, moved below that, and eventually price just came back all the way up and continued going up. So imagine if you are taking entry on smaller time frame like 15 minute, 30 minute, then you would see a candle. I'll just mark this first to show you. All right. So when I go down to 15 minute time frame, you can see there's a huge candle right here. If I go down to 5 minute time frame, there is a candle inside, right? So price will a lot of time create wicks for you, a lot of time. And you have to wait when your analysis is based on 4 hour time frame that I want this kind of structure, but your entries can be at any time frame. Now, right here as well, you can see the 1 hour closed below and then the price started going down and now it's just retracing. Probability there are high odds that price will close above this EMA. There are higher odds of that, but of course, there's no assurance, there's no guarantee on this. But I am expecting price to close above this. At this point as well, I expected to price actually go up, but again, price didn't go up. It didn't create that much of a wick I was looking for, and that's okay because that's just one of the possibilities that market does. You can see this small wick, it's not even visible. This small wick is very rare. All these candles throughout history, you see there's one candle like this right here. But imagine the count. How many times do you see that candle? That's one, and there's two. You can ignore this because this is just a closing candle. Three. Even if you count that, let's measure how many candles these are from here to here. That's 42 bars, right? Out of 42 bars, only three, four candles like this. And if I look back more, it's more than 50, 60 candles. So that's how you analyze and you understand that the market, the price action is more of you have to look at what kind of candles are getting created, what kind of candles are getting created, how it can react around this. You see, in this trade, I didn't put my stop loss even at break even. And the reason is plain simple. I have been seeing that the price action, when it does something like this, it goes up, at some point it comes down, and then it goes up, again it came down, then it moved up. So this is just one of the possibilities that has already happened in the market. And if I put my stop loss around this level, I won't be able to have that distance. It can easily break even and start continuing going up. So that also puts me in a risk where if price actually starts going down, it can hit my stop loss. And that's your probability of trading. You win some, you lose some, right? If it goes up, we are going to capture 1:6. If it doesn't, it's going to be one loss, right? Against six. So I hope, Yasir, you got this. 4-hour candle closes, 1-hour candle closes, all have their own meaning. You don't need a 4-hour candle close always. It's just when you see support and resistance, there's a resistance of 4-hour time frame. You need to see a candle close above that resistance if you're looking for a buy. If you're looking for a buy, you definitely need a close of 4-hour time frame because at some point it can easily turn back and close inside it. So that would seem like a fake breakout. Right here, we didn't have any resistance, and I can see clear structures going up to this area. So it made sense to take an entry on 1-hour time frame. Was what I wanted on 4-hour time frame is already done. Next, let's start with entries. Let's start with entries. Let me use a chart drawing only. All right. Now, there are different kind of structures in the market. Like price often goes somewhat like this. Now, at this point, I hope you're getting this. There is some kind of resistance around this area, right? There is some kind of resistance happening around this area. Now, when you're looking for an entry above resistance, what you want is definitely a breakout. You want a breakout, but what you see is that there needs to be a retest as well for the price to continue. As I have told you in my previous session, that buyers can't just keep on continue moving the price action. A lot of time price has to come back to the support level, get more buyers, and then start moving up. And there's a very simple logic behind this, that the price has already moved up, right? Now as a buyer, all of these people, all of these traders, institutions, everyone, they are seeing exactly what you are seeing on the chart, right? Now they see there's some support and resistance. Now there's a very simple idea which everyone has in their mind, that they want to buy things at a discount, at a discounted price. Now what exactly can be that discounted price? That can be the support level. So what happens is when price starts moving up, buyers accumulate at support levels at this point. Now when price comes down to this area, all these orders gets executed, all these buyers orders gets executed, and price continues moving up. Now from this point, as soon as price starts moving up, there are more people who are actually waiting for a confirmation. They are waiting for confirmation let's say they see an engulfing candle around this area, which is also a continuation, right? This, let's say this is a 4 hour time frame line chart. Now price is bearish around this area, it's bearish, and again it's bearish. Now price made a bullish move. Now what they see at this point is there's a continuation, there's an engulfing candle around this area, and price has started to move up. Now from this point you will see more buyers coming in, and eventually they are pushing this area. When the price starts crossing this area, there are more buyers again sitting around this area where they see there's a break of the previous high, which we just did on gold, and they start again pushing this area. Now, around this area, price has, let's say, moved around this place. There will be some kind of again support. There's a touch right here. Buyers might come in and want to buy at a discounted price. So you will see some consolidation around this point, and then again price starts continue going up. Unless there is something wrong with the market where fundamentals comes in and they want to sell the particular asset, what they do is again sellers step in and they break all of these areas. And a lot of times this area doesn't get respected, this area doesn't get respected. And again, there's a simple theory that at this point there's a lot of sellers, even though there were a lot of buyers at support, the sellers were more than buyers. So of course they filled their orders and they just became liquidity. At this point the price started continue going down. So that's why a lot of times what we do is we wait for confirmations. We wait for confirmation. There are different type of confirmations. When trading trend line, there's a different confirmation. You use support and all these places to put your stop loss, and you need to make sure that the price is pushing up. The price is pushing up. We don't buy around this level when the price is coming down. We buy around this level or around this level, because now we have some kind of assurance that buyers are still in control in the market and the price can continue going up. Now, this kind of price action can happen a lot of times in the market. This kind of price action can happen a lot of times in the market where you will see buyers stepped in and came down, and this is happening on 15 minute, this is happening on 30 minute, and all of these time frames. And that's why we use 4 hour time frame, 1 hour time frame to understand what price action is doing, because now all these time frames that shows a lot of buyers momentum and volatility in the market, that the buyers are in control now. When you go on 15-minute time frame, these kind of structures are very common. That's happening every now and then. You just can't keep on taking entries around this level. So that's why we use these time frames. And there are definitely a lot of successful day traders and scalpers who do this with lower time frames, but majority of the scalpers eventually fail, right? That's there. You can just check it on Google, ask an AI chatbot, get, the research on how scalpers fail. A lot of scalpers actually fail, and that's why we do swing trading, where confirmation is much better. You see much clear indications in the market. I hope I'm making sense. Next, let's start with exact entries with the examples. Now, at this point, I told you there are multiple ways of getting entry. One, we analyze the market based on what history was doing, and I wanted a strong candle close above this area. But I saw that if I wait for a strong candle close above this area, my stop loss will be very huge. Imagine having a stop loss of around 100 pips. So I took a decision based on what I saw in the market. There's this character where price is coming down on the 4 hour time frame, again coming down, and then doing a continuation. It did exactly that. The first time it came on the line, again moved up, retested the EMA the same way, and started moving up. Now here, the entry is clearly, you can see, based on 4 hour time frame. You can see there's a good candle close above this area. I had actually missed this move. I was not looking at the market. So I entered a little late, where the price at this point was just consolidating on the 1 hour time frame. Let me show you that. Yeah. 1 hour time frame actually first did this and then it started moving. So I saw an hour late when the market started doing move, and we got the entry based on this. But you can see this. the price is doing the same exact thing. Right here, the 4 hour became bullish, and then it's still bullish, and the price is giving me an engulfing candle, and that is a sign of continuation that the trade is going to continue. The 4 hour is going to continue. Now, of course, until we see a break of this, that's not a guarantee. But this is enough 4 hour time frame. I saw good buyers stepping in. It was above my trend line, and that was enough for me. That is definitely a risk. We could have also entered right here, put a stop loss around here, but I wanted to cover my trend line. And I did that, and this was a good entry. I hope you're understanding what I mean by entries, what kind of candles you're looking for. You're looking for an engulfing type candle, right? Engulfing type candle right here. A lot of times you won't see an engulfing candle. You might see a candle, let's say, which is doing like this. It's definitely an engulfing, but it's not a strong candle. It's smaller than this candle, which doesn't give a good vibe. Now, at this point, where will you get entry? You can't get an entry at this point. You can look for an entry from this point because now there is a new high. There is a new high at this area. You don't need to wait for retracement to take trade because definitely a lot of times your trade goes in drawdown. You see some kind of retracement, but a lot of times price also starts continue moving up without coming to drawdown. That has happened in a lot of my trades. Price, I took entry and then price started just moving up quickly. So both the odds are possible, but if you wait for retracement, there are some good chances that a lot of trades will be missed. And later, when you look for entry, your stop loss would be very big. So, what you do instead is when you see an entry and you see a missed trade, that the trade is gone, at that point, you can put a buy limit and wait for retracement. For example, let's say this candle has just moved up and maybe you didn't get an entry around this point where I had sent the signal. You can just put a buy limit order from this price and the price touches this area, you got the entry and then it started moving up. Something like that you can always do. If you have missed the trade, you can put a buy limit, but don't try to take an entry where it's not desirable because the more bigger your stop loss is, the more it is going to be difficult for you to have a good risk to reward. The risk to reward is the most important thing even compared to the win rate. Right now I'm going on 80% win rate. Recently it was 67 a month back or something like that, but now I have 80% win rate. But these win rate constantly changes. It keeps on changing. But if you have a good risk to reward, if you go with a very good risk to reward, most of the times what you will see is, let's say you're hitting 1 is to 3, 1 is to 4, 1 is to 5. One win is covering your three losses, one win is covering your four losses, right? So, in short, even if you are on a 40% win rate, you're very much profitable with a high risk to reward. So, make sure you always look for a good risk to reward when you're trading. When it's 1 is to 2, it's okay to not have a trade. Right here, I took a risk because I saw a risk to reward of 1 is to 4. If it was giving me 1 is to 2 at this point, I wouldn't have taken this trade. There's no reason for me to take this trade if it gives me 1 is to 2 because the risk right here is very high on this trade. And how do I see that? It's very simple. I can see there's a wick zone around this level where the liquidity is taken from this area. From this area. So this is a very risky trade compared to our AUD trade. But the risk to reward is so high that it's worth it to take that trade. We have done everything right. We have put a stop loss below the structure. We couldn't put the stop loss around here because then it would be around this level. And 10,768 pips is not a good trade for me. You always have to make sure what kind of stop loss you're having in your trade. This one is 8,600 pips. Previously, when the market was normal, 4,000, 5,000 pips, 6,000 pips was normal. But from here, the market changed drastically. So we are right now doing around 8,000 pips. If market starts creating candles, like small candles again, like it was doing in the past, we would return back to 4,000, 5,000 pip stop loss. Not all stop losses are same. Each pair has their own candle sizes and the pips that you get with experience. This one, I know it's going to work great around 100 pips at max, can easily give you 1 is to 2. 80 pips, 70 pips can give you 1 is to 3, 1 is to 4. So you have to make sure your stop loss is not way too big and it's not way too small, because a 30 pip stop loss on AUD JPY can easily wick you out. It can very easily do that, and it will do in a matter of an hour or 30 minutes or maybe 2 hours. When you're swing trading, you need to make sure that it takes a lot of time to hit your stop loss. If it's hitting in 1 hour, it should be very rare. Now back again. So these are the ways you understand what kind of entries you're looking for. You should look for candles that look like this, which is an engulfing candle. Now, there are multiple entries. You can also look for structures that break the previous high, right? When there are higher highs, two higher highs after a bearish momentum, if you're looking for a bullish trade, after a bearish momentum, you see two higher highs getting created. That means it's a sign of continuation, but it should happen support, at a support area. For example, for this trend line is a support area, and we see the trend shifting at the support area. That's why we are in this trade. If it's happening somewhere else, like right here, it won't mean anything to us. And majorly, except an engulfing candle, I'm more of actually looking at strong candles, just strong candles. I don't care if it's actually engulfing anything. I don't really care about that. What I care is if there is a strong buy candle around this area, if there is a proper structure getting retested, and then is it breaking that, right? If I'm taking a trade, I'm looking if there is a resistance around this area, if that is getting broken. All this stuff eventually make you understand what kind of trade you want to enter in. If you keep on looking for candles like, let's say this is a pin bar, right? This is a pin bar. So there are so many candlestick patterns and candle patterns itself, where this bar is called a pin bar, this bar is called of more of doji, and all of these don't matter. After this doji, you can definitely see there's a huge candle moving up. So this candle was just a waste. Right here, the pin bar, I don't care about this because there are so many pin bars right around these areas. There's a pin bar right here, right? Did price eject from this place? No. And if you would say you should look for these candles around support areas, this is a support area, 2 hour support area, 2 hour time frame, and there is a pin bar around this, and still price has continued moving down. So all of these patterns, if you have remembered how what this candle means, a shooting star, morning star, forget everything about that. We are not looking for those patterns. We are not looking for head and shoulders. Head and shoulders at the end, what does it mean? Let's say we are doing this. This is the shoulder. This is a straight shoulder, right? Now this is the head. Now there's the shoulder again. What is this exactly telling you? And where do you enter this trade? You wait for a retest, a break and retest of this area, and then you enter. So at the end, there's nothing different than what I'm doing in the price action trading. If you see this price action, there is this support area at this point where price has been retesting, right? And from this point, it has broken the support and now it is retesting. We do all of these things similar. We wait for a retest and then again we wait for continuation of this break and then we enter. There's very simple logic behind it. So head and shoulders is not going to give you anything better at this point. Now you see different kind of head and shoulders. This is one head and shoulder. Right here, what we are in fact doing is break of support and then short, retest and short. Now let's say there is a head and shoulder from this level. It is at an angle, right? You see this, and now price coming down, retesting, and then you look for short, right? Now, when you see a price action like this, again, this is moving in a trend, right? This is moving in a trend line. Now, when you see the lows getting hit, you look for a trade where it shows a break and then retest and then you enter. So all of this head and shoulder, cup and handle, these are just simple price action. At the end, what I have taught you so far is all the same. Head and shoulder should not have any special value to you because a lot of times head and shoulder also doesn't work. What works is simple price action. A lot of times you see head and shoulder getting created and nothing happens at the end. You don't see you don't see any benefit in that. You see this shoulder, head, shoulder. This is some kind of a neckline, but it didn't work out. And in the price action, you will see, let's go to Euro USD. You will see shoulders and heads a lot of times. There's shoulder, there's some kind of head, there's shoulder getting created. The neckline would come differently. But what we are looking for is always support and resistance, nothing else. Trendline is a way of creating support and resistance. It's not a horizontal line. It's as simple as that. Now, when looking for entries, you also need to make sure what kind of resistance you're looking in the trade. For example, in this pair, the analysis was this on Saturday that I want the price to come up here, touch this, go down, and then break this. And then we'll look for entry. Now, any 1 hour candle break above this is going to justify that. I don't want a retest of this area. And the reason is pretty simple that the price goes up, there is a proper resistance at this point, there's a proper support at this area. This has acted as support. And so, what you want to see is that the price breaks this support before we enter. Because after you take an entry, imagine the time frame became bullish right here. We could have taken an entry from this place, put our stop loss around this level below this support, and wait for it. But what would have happened? When you know the price is going to reject because it has done this in the past, the price can easily reject from this area. Why would you take an entry anywhere else? Do you have any reason for that? So you have to look at history. That's how you draw support and resistance. So there are multiple ways: break and retest, right? Continuation, right? And then engulfing candles to enter, right? Now, break and retest is what? There's a support line. You wait for price to do this, and you at least that needs to be done on 1 hour time frame. If you see a structure of 4 hour time frame, at this area, this is a 4 hour resistance, right? So you need a 4 hour candle close above this. 4 hour candle close above this, and then you're ready to enter. I hope I'm making sense. If I look for a 1 hour time frame closing just above this, that can easily mean the candle can close something like this or maybe like this. It's very easy for the price to retrace at the very next candle. You definitely see a lot of huge candles coming down like this. Imagine who would have thought that price can do this from here. Price was nicely moving up, breaking highs, and then after this first candle and this second candle, the price came down all the way till here, took support, and then continued moving up. Now, do you have any questions on entry? Because a lot of answers will actually come from your questions. what kind of confusions you have about entry, all of that. Please ask away.
Hi, sir.
Yeah, hi.
Yeah, actually, you told that head and shoulder and a morning star and a hammer. So the things we can use as a second confirmation, right? It's like we can use it as a double confirmation.
Why do you need a second confirmation with morning star and all the stuff? So what I'm saying is, let's say there's a morning star or an evening star pattern forming around your areas. If you have analyzed the market already, right? In the analysis, what you do is you say that I want to see a break of resistance, a retest, and then a continuation, right? Something like this. Now, so whatever pattern it is making, is it going to change anything for you? If you have decided that you're looking for a 4 hour break and retest, right? 4 hour break and retest, and that is all you're looking for. You're not looking for a morning star or an evening star. No one analyzes like this, that I'm looking for this candlestick pattern around this area. What they look for is break and retest, a continuation trade where, let's say, it's going down from this area, and imagine there's a support at this level. If I'm looking for a continuation, what I'm looking for is I want the price to continue going down, and when it breaks, I'm gonna take an entry. Now, however it happens, however, it doesn't matter. All of that story doesn't matter. I don't care about if it's an engulfing candle getting created, or if there's a morning star pattern getting created, or I saw a doji around this area on the support level. None of this matter, right? All it matters is that the price broke support with a strong candle close. All it matters is whether candle was strong or not. And by candle close strong, in some ways you do use doji and all that stuff, where let's say this is the support and you see a huge wick around this area, a huge wick around this area, and a very small body. That means buyers and sellers are right now in a turmoil. They haven't decided where the price will go, right? So when you see a strong candle, that gives you more of an assurance. A good quality candle will definitely give an assurance that the price right now can easily go up. For example, when you see a candle like this, a beautiful candle like this, you get some assurance that the price at the very next moment will go up. This is what you expect from the price. And fake breakouts, right now, there's no special ways to detect that, right? But what you look for is, of course, as I said, on 4 hour resistance, you're looking for the 4 hour candle close, a strong candle close above resistance. That means you are most of the times avoiding that fake breakouts. The problem with people is that they are always in rush, right? They see a close over this area a lot, a wick going up, a candle actually moving up at this point, and they think that right now they'll miss the entry. And that's when they think of, let's take an entry right here. Let's take an entry. The price is just moving up. The price is just moving up. Let's take an entry at this point. But what happens next is the very next candles come down very easily, and that 4 hour candle close eventually happens on the lower time frame. So on the daily time frame, you're looking for a break and retest, all this stuff. It has to be on the daily time frame. It has to be on the candle close, needs to be above this area. If you're looking for entry, let's say this is a resistance. If you're looking for entry on the break of this resistance, you want to see price coming down and then going up. If it's not coming down and going up directly like this one, you look for another resistance. For example, this is another resistance. Even though it's just a high, I haven't seen the price action before. But let's say this is the high. And then what you see is you wait for a retest around this level and then continuation again. And that exactly has happened right here. The candle closed around this area. It went up at some point, came down, and then retested this level, continued going up. This right here from here to here could be a stop loss. And then price gave you a very good risk to reward. In this Wix itself, there's a lot of information. Wicks are the ones that create fake breakouts, and that's why you have to look for strong candle closes. Any more questions? Please ask. Now, Rafi, also this, if you have been in my Telegram FXP, you have been looking at the entries I take, right? In all my period, I have never talked about what kind of pattern it is creating. There's a head and shoulder, there's a cup and handle, or anything like that. Yet you have seen those trades go to profit, right?
Yeah, yeah, yeah.
They hit their targets. I am making money. A lot of guys with me are making money. And all of this we are doing without those kind of strategies where you're looking for head and shoulders and all of that. Because head and shoulders most of the time is a waste of time.
Okay. Thank you, sir.
Yeah. EMA support and SR zone break enough stop loss with market consolidate area on large time as previous. So, I didn't get your question. If you can rephrase that, it would be much better. Yasir, any other strong scenarios where we should avoid or take entries? So, let's say, Yasir, we were looking for an entry on gold again, right? In this trade, if I would have seen a candle close right at this point, this candle, this one, exact one, if I would have seen a candle close right here, I wouldn't have taken entry. And the reason is plain simple that this can easily become double top. And double top is again similar to resistance. When there's a touch again where the price is closing right here around this area, and this can act as a resistance, and then the price can start moving down. So, what you need to see is after this area, expansion in price. When there's expansion like this, where the candle has moved up till this area, that gives you a good assurance. But again, you have to wait for the last minute, the candle close. And when that happens, and the distance is good between this highs, which is not like here, even this one, if it closes around here, it's good because this doesn't create the resistance double top thing, right? Now, double top is something like same as head and shoulders, but the core ideas behind all of this stuff is support and resistance. Understand this. All of this stuff at the end means support and resistance. So when your candle closes just around this level, that means it's going to affect you. It's not good for you. So at this point, you don't take an entry. Now there are a thousand scenarios, but you will get to learn those stuff from my entries, from all the entries I take. Because what I do is I just look at price action, and based on that I take my entries. I don't do anything else. But over the period I have gained that experience about what candle is good, what kind of price action is good, which isn't. For example, on Euro USD, I expected the price to go up, move down, and then go up. Now, if the price from here would have just started going up, I wouldn't take an entry. Reason being, the stop loss is too big for me, right? From year to year, the stop loss is big. Then this is another scenario where because of huge stop losses, you can't take entry. You need structures. You should always look for structures around your area when taking entry. You need to have a tighter stop loss. You can't have large stop losses. And when the price is not reacting from these areas, right? Not these areas. If the price doesn't take support from these areas, then it becomes difficult for you to enter the trade. If it takes support, let's say it rejected from here and then it takes support from here and then it moves up, or let's say the price is going up. Okay, let's imagine this, the price is going up and now from right here it comes down to take support and then moves up, then it's a good trade. Then you can enter because price took buyers with them. And if price doesn't take buyers with them, it starts just going up like this. What happens is that these buyers are still sitting here, right? And now because the price didn't discounted yet, a lot of buyers are sitting here, and the buyers around this place are exhausting themselves. Just understand this idea, the concept behind this. A lot of buyers are exhausting themselves at this place. So, what will happen next? If buyers are exhausted, sellers will step in. And when sellers step in, what they do is they let the price come down to this level. And now the buyers will again step in. That means it will be a bad trade for you because your price will come to draw down. There is a very higher chance that if you don't let the price take support, then price is going to come down and take that support and then move up. Because all of this support and resistance lines, they are just magnets. Understand them as magnets. Price moves between them. If you're saying there's a lot of higher high getting created, for example, on gold, a lot of times higher highs are getting created and there's no structure in history around that area. But then comes the psychological resistance. $5,000 is a psychological resistance. $5,500, 5,100, 5,200. All these areas, a lot of times you will see some kind of structures happening. Let's say when we saw the price coming to $5,200, the first rejection came in exactly from 5,200. You see this candle, you look at the high right here, the high value. The high is 5,200.665. So there's a psychological resistance right here. And these psychological resistance creates a deeper zones over the period. Once price has moved through these areas a lot of times, you will find a proper zones where support is taking and resistance is taken, and there are some liquidity levels. Let's say 5,202 would act as a liquidity level. Now that is in history. That is in history. So next time when the price is around this area, it will again take similar liquidity levels, very similar liquidity levels, and then it will continue going up. Most of the times, these price actions are doing exactly what they have done before. It might not be the exact same price. For example, a price action around here could match up with a price action maybe around here, around this level. You just need to have an eye for that. You need to look at what kind of candle the market creates. If you look at, let's say, opening and closing of candles, mostly let's say closing of candles, when you're looking at the last 4 hour candle on any day, on any day, you will see that the market almost creates similar type of candles. Let's say on Thursday night or Friday night. Let's compare Friday night because that is more obvious. Friday night candles are very similar to all the Friday night candles in history. The last 4 hour candles. Go and check that in history. Check the last 4 hour candle of every Friday. Compare Wednesday, compare Thursday, compare Monday. You will see in history a lot of this price action is repeated. A lot of this price action is very much repeated. All you need to have is an eye. In history, in my chats, I have told you price when moving up, I say that price is going to come down. And the reason is very simple that the price hasn't tested the bottom level. There's no wick around this area. AUD JPY, when the day opened, I was very sure the price is coming down. And the reason was the candle opened low and the wick was very small. The wick was very small, and that candle after that 1 hour and the second hour candle closed very nearby. And that's why I expected the price to actually hold a move down, and that has happened. So when you look at price actions, you have to compare, you have to look at in a way where you look at history as well. When you see the weekly candles, you need to see what kind of wicks they create. Do they create a small wick? There's a wick right here, which is small. There's a second wick right here, which is small. But most of the times, the wicks are huge. So when the wicks are huge, what you understand is that the price can easily come down. I hope I'm making sense. Always compare with history, always compare what's happening. And that is how you take entry, that is how you put your stop loss, and that is also how you trail your stop loss. Now, any more questions? Yunus, can you rephrase what you said? Or is that a note?
Just checklist like some.
Okay, that's a note, right? That's a checklist. All right.
Yeah.
Yeah. At the end, see, in all my sessions, I have actually taught you about all kind of entries. For example, EMA based, I talked about. I told you that when you look at the price action, you have to look at what kind of EMA it is retesting, where the odds are very low, where price comes and breaks that, right? We have talked about EMA a lot. Now, from that EMA price action, you actually look at the same stuff, same exact same stuff, what the price has repeated, and based on that, you take entry. There's no special entry logic about here, right? All you do is you repeat the same process, like you have taken note that there's a break. When there's support resistance, you wait for a break and retest. And why you wait for retest? Again, I told you in this session itself that price has to take that support, else it will come back later because the buyers will get exhausted. For example, right here, you see there's a resistance at this point. Price goes up, comes down, goes up again, and now it is finally taking support. Buyers are stepping in, goes up again, buyers stepping in. And after this happened, price never came back to this area. So price has to take liquidity. It has to take those buyers with them to continue going up. If it doesn't do that, it becomes very difficult for you to take an entry. And that's completely okay because what happens is the market is going to give you a lot more opportunities on different pairs. If this is not happening where price is not retesting and it's not letting you have that continuation, don't enter the market because some other pair will be available this week or maybe next week. It's as simple as that. The main problem with entries is people rush. People rush way too much. They see price took some kind of support around this level. Maybe it's not exactly the same level I wanted, but after that price broke and started continuation. And right here I take an entry. What happens next? Price comes to draw down very easily. It goes up, again comes to draw down. So your entry should be very much about where it has done everything you wanted. If the price has done everything you wanted, the break and retest is done, the liquidity is taken. Important is whether the market has taken liquidity and liquidities are sitting around support areas. And how do you find liquidities? In a consolidating market where price eventually moves in zones, you see liquidity levels like this. This is the liquidity level, this is the liquidity level. Now this has become a new liquidity level where price can easily come and go back. You can see the twice price came around this level back to back and started moving up. Now, from the history, what you do is you look back again, you see there's a liquidity level right here. Let's zoom this. I just dropped this line for a better understanding. There's a liquidity level around this area. And from the same level, the price has continued. So, in short, is price doing anything different? It's doing the exact same thing again and again. I hope you're getting this. It's doing the exact same thing. You can always find some kind of relation about what price is doing. And it's very easy to do. It's just you have to look back at history. Now, any more questions about entries? So, definitely, this is a difficult session. But to summarize this in a very simple way, all you look for to take entry is structures. What you look for is structures. You look for a resistance getting reacted, you look for a support getting reacted, and you look for the break of that resistance again. It's as simple as that. You look for all these stuff and make sure you don't get in a loop. For example, if I am looking for an entry at this point, I see there's a resistance right here and price taking some kind of support and then moving up. What I'll do is I'll look for an entry at this point when it is retesting and then it's going up. Now, at this point, somewhere you will see again there's a resistance. the price will take support and keep going up. So this can happen again and again. There's a lot of small resistances, lot of support coming up and going. What you need to look for, what tells you exactly that this is where you take entry, and that's it. You don't keep going back and forth on this. It's swing highs and swing lows, right? It's the support and resistance of the daily time frame. When you mark your levels of the daily time frame, that gives you an idea that these are the swing lows. At the end, what is support resistance? It is based on swing lows and swing highs. Now, this low has created a support, and this is the resistance around this point. There's touches. So, this is the place from where you look for entry, right? And what I clearly see is that the price comes down, it takes resistance, it can still come down again. So, I need a break of that to take an entry. That's it. Don't get stuck in a loop. Don't keep on looking for support and resistances, more support and retest, or maybe I'll take an entry again on some other support and resistance, because let's say if price didn't react on this support line, that means the price can easily come down to this level. So later, if you're planning to take entry, it's going to be painful. You have to buy at right levels, and that should come from higher time frames. All right. As there are no questions now, I'll end this session. In the next session, we'll talk about stop loss, how to move stop loss. All of these sessions are going to be very similar because now you know all the basics of it. The EMA, everything is just a different session, but all of these sessions I've already taught you is the main base of everything. It's the main base of everything I have taught you so far. So again, if you have any confusion on EMA or support resistance or break and retest, watch my sessions again, watch my analysis videos, and you will get to learn a lot. All right. I'll see you guys on Wednesday then. Thank you and bye.